Take a look at Super Group, a broad-based supply chain management business focused on vehicle dealerships and fleet management. Let me begin with you, Daniel. When you look at Super Group,
yes,
when you look at the history that they have had and all the trials and tribulations that they've suffered over the years, would you look now and say, this company has been restored to a state where you can begin looking again and seeing opportunity?
I think that you could have looked at this company before, even to this point.
When would that have been?
I think that, okay, basically after the rights issue, you had to be a bit careful because at that stage you weren't sure where the company was.
Sure.
The rights issue was at 45 cents. You had to see if the turnaround strategy would in fact take. But the new management has done all the right things. They've got great management there. Colin Brown, the new CFO, he's on the ball. Peter Mountford, the guys are doing interesting things within the business. They've totally turned the debt situation around. There's a lot of cash flow coming out of that business now that was previously going to the debt side of things. There could be a divvy coming soon, in my opinion. So I think it's still got some legs. And I think one should have actually been looking at it before this even.
Yeah.
But I think even at this level, it's still got a bit to go.
Yeah, at this level for Daniel, he would be still looking at it. Anthony, for you, when you look at Super Group, and we've just spoken about the history, is this a stock to look at?
Yes, definitely. We think that there's real potential for them to do a substantial share buyback. This business is massively overcapitalized.
Right.
A business like this, which essentially is a balance sheet business that rents out assets, should have debt on it. And the amount of cash that's been generated, they've been able to pay back existing debt, refinance facilities with different covenants that allow them to do a share buyback, which is news that's just been announced. So we think that some kind of announcement in terms of a restructuring of the balance sheet is imminent. We think that they could possibly buy back about R1 billion worth, 80 million shares. That will have a massive kick on earnings per share going forward.
Yeah. Is that not too soon, particularly given the history that we've just been talking about?
No, I mean, I think the management team have done a fantastic job in getting rid of loss-making operations, cutting out costs, restructuring the business, focusing on their core competency,
yeah,
which is warehouse and logistics management solutions.
Yeah.
I think that, I think the time is ripe for them to gear up the balance sheet.
Yeah. So let's talk. Yeah, sure. Let's talk about the business itself. They are operating in an economy where we know that growth has been slow. We know that there have been challenges in terms of the government rollout on infrastructure. We know that in terms of imports, we also have had issues, particularly given the weaker rand that we've seen since late last month. When you look at that whole universe, in terms of that overall business and the business that they are operating in, do you see a company here able to effectively compete?
Absolutely. We think that in the last couple of years, we've seen almost a retail boom. And this company is geared towards kind of FMCG type businesses. We think that it's competitive in terms of warehouse and logistics management services. As soon as you get your operations working very efficiently, and the contract goes up for renegotiation, and you have to kind of reprice against a very competitive environment. Mm. But having said that, this is a quality management team. It has a solid asset base. They've renewed a lot of their trucks and equipment. There's massive opportunity for them to migrate with their customers into Africa. Mm. So we think that there's massive long-term potential in the share as well.
Which suggests that perhaps they need to go back to the road business that they had before. Would you see an opportunity in that, Daniel?
I think the way they've structured the business now is fine. I think they can run with that.
Yeah.
They can add on to these current businesses. They can carry on adding efficiencies where necessary. So I'd be happy with the way things are now.
Yeah. Where is the risk of investing in Super Group? I mean, we talk about all the nice things, but there must be some kind of risk, surely, in terms of what they face in operating their business.
Well, I mean, part of the business is managing fleets, and that's based on contracts. Mm. These contracts run for about 3 years. When these contracts expire, there's no guarantee that they'll be renewed. It's highly likely they will be because it's much easier for the customer to just carry on using them, but there's no guarantee. So if for whatever reason the customer wants to move that contract away, as would be the risk with any fleet management business, they would lose that business.
Sure. Anthony?
Yeah, I think this is a fairly low-risk business. I think that it has gone through a very tough restructuring phase, and the business has therefore been de-risked. Mm-hmm. But you're right, you know, these contracts are up for renegotiation. If you're not performing on those contracts, then your competitors can take them away from you very easily.
Yeah, so at around 1140 Rand, would you be coming in?
Yeah, assuming that they do the share buyback, buy 80 million shares back, we think this business is on a forward PE to June of about 7.5, dividend yield of about 4. We think it's attractively priced and relative to Imperial, for example, and we see possibly 30% upside from here over 2 years.
You get ahead of my question. Love or not?
We love the stock.
You love the stock ahead of the share buyback. And you've already given a figure for management to think about. For you, Daniel?
Love.
There is love, yeah?
Yeah, there's love,
so 2 loves after 2 not so loves. So Supergroup does it for our guests tonight.